Hello guys, welcome back to another episode here. So in this video, we are going to learn about the market structure. This is another important video of this whole series, because if you are not able to understand the proper market structure that's going on in the current market, then you won't be able to be in the right side of the market, okay? So you always need to be very sure what the structure is saying, okay? Because only when you're correct in the structure, you will be correct in everything after that. So order block, everything comes from the structure. Only the structure is the most important thing here. So let's dive into and let's understand what type of structure we have. So we have two types of trend. So either we are uptrending or we are downtrending. In uptrending, all the highs in an uptrend are called higher highs, and all the lows in an uptrend are called higher lows. So you see, so here we have an sample uptrend, and you see all the highs in upfront are called higher highs, and all the lows are called higher low. Basically, the first word is higher here. And in the downtrend, the first word is lower. That's the only difference. In downtrend, the highest high, the low is still the low, but the first word is just the lower instead of the higher. So in the downtrend, what's going on? All the highs are lower highs, and all the lows are lower lows. So whenever you are an upfront, you need to be knowing that you are creating higher highs and higher lows. So how the market goes in upfront, it's by breaking the higher highs. You see this high rise broken, a new higher high is created, and then this high high is broken, a new higher high is created. This high high is broken, a new high high. So you break and create new higher highs. In an uptrend, in downtrend, it's that opposite. You break a lower low and you create a new lower low. So you break this lower low and create a new lower low. You break this lower low, create a new lower low. So in downtrend, you break and create new lower lows. Enough brand, you break and create new higher highs. So these are the main four structures called the higher high, higher low, and lower high and lower low. Now, when you take a trend, any time frame it will be either upfront or a downtrend. Of course, when you see sometimes you'll see the 1 hour chart, it's in an up branding. And the same time, when you look at the 3-minute chart or the 5-minute chart, it's in down branding. And you are confused. Different time frame are showing me different trend, what the exact trend the market is in. It all starts from the higher time frame. Now let me show you a scenario where the higher time frame is showing you one point, and the lower time frame might show you another trend, but it's still inside the higher time frame only. Now see here, this is an uptrend, a higher time frame up, and now you see the black one is the higher time frame. You see in higher time frame, the black one is creating higher highs, higher lows, again, comes down, higher low, and a higher high. So the overall uptrend is just trending up. It's never trending down. But this is in higher time frame. When you in the same time frame, when you're in the same period, when you go down to a lower time frame. This is how the lower time frame will look like. Okay, the lower time frame is in an uptrend, creating higher highs and higher lows here, but when the higher time frame is moving from the higher high to higher low, basically the higher time frame is retracing. At that particular time, your lower time frame is in downtrend. You see you are creating lower high and lower low. So in upfront, whenever you break a higher low, that is break-off structure. So whenever you break a higher low, you start a downtrend. And in downtrend, whenever you break a lower high, you start back and upfront. So you need to remember this thing more clearly. In uptrend, only the higher high should break and new higher high should create it. The higher low should never be broken. But if at all a higher low is broken, then that means that's an indication of a new downtrend being started. And you see market goes down similarly in a downtrend, only the lower low should break to create new lows. But if at all a lower high is broken, then that indicates you a start of an uptrend. Okay, so this is how the market is moving. The higher time frame never changed the trend. It's just higher, high, high, low, high, high. It's just still moving in one direction only. But inside the higher time frame, you see the lower time frame is uptrending here, downtrending in this particular leg, again, uptrending here. So this is how the lower time frame will move. So we only need to be entering when both are in the same direction. So if you are entering any buy in this area, that's good, because in this leg, higher time frame is an uptrend, the lower time frame is also in an upfront. What about this leg? In this leg, your higher time frame is still in an upfront. Your higher time frame never changed the trend. It's just retracing to create a higher load. That's it. Your higher time frame is still in an upfront, but the lower time frame, you can clearly See, it's in downtrend. So here they are not magic. They are, opposite to each other. In this case, you should not enter any trade, neither buy nor sell again in this leg. Yes, you can enter buys because your higher time frame is an uptrend, your lower time also in an uptrend. I hope that makes sense. Now, let's understand example of a downtrend as well. So this is how the downtrend looks like. Now you see higher time frame is getting lower, lows, lower, high, lower, low, lower, high. Overall trending down. It's just trending down. Higher time frame is not at all changing its trend. But inside the higher time frame, you see lower time frame. It's in downtrending here, and when the lower high broken, it's uptrending. It's graduating higher highs and higher lows, and again, downtrending. So in this leg, both are in downtrend. In this leg, both are in downtrend. So these both are areas to sell, but in this leg, they are opposite. The higher time frame is trending down, but the lower time frame is trending up. They are opposite. You should not be entering any trade in this particular. I hope that makes sense now. Okay, so why the lower time frame is trending up here to create a lower high in a higher time frame? Understand that thing. Okay, so the market have the higher time frame have created a lower low. Okay, let's take a 1 hour chart. So the 1 hour chart has created a lower low. Now the 1 hour has to create a lower high before creating another lower low. So to create a lower high, it has to go up. So that's why the lower time frame, let's take a 5-minute chart, will be uptrending to create a lower high in a 1 hour chart. Once the lower high is created, you see the structure is broken and the 5 minutes started down running again. Why to create a lower low in 1 hour? So this is why you see different trend on different time frame. Now let's see one example of a chart also. So this is one example of pound, JPY. This is the 1 hour chart. Now here, if you see here, let me plot with the black-red line. So you see we have a lower low, and then we have a lower high. Again, you have a lower low, we have a lower high, lower low, lower high, lower low. So market is down branding on the 1 hour chart. Okay, so this is the red one. As you can see here, let me make more bright so it's much more clear. And also, let me make a thick one. Yep. So now you see it's clearly visible. Okay, so this is the higher time frame move. So you see the yellow line. This is the lower lows and lower highs. This how the 1 hour chart is moving. Now let's see inside this how the 5-minute chart is moving. So you see here perfect example when the market was creating a lower low. You see the fire is also trending down, okay? What you can clearly see here, the market is also trending down, okay? And then once you created a lower low, now you want to create a lower high on the 1 hour chart, then 5 minutes. You see it's breaking the structure because this was the last lower high. And that lower high is broken, and markets start going up, okay? To create the lower high here, okay? And once created that, you see again, the 5-minute chart started going down slowly. It started going down only okay. And now let's again check. So once the lower low is created on the 1 hour, the 5-minute, we have to create a lower high. Now, because when the lower low is created, we expect the market to go up and create a lower high. That's why the 5-minute is, you see the last lower high is this one. And this is broken to start an uptrend on the 5-minute chart after it is created. You see 5 minutes again change the trend. It's going down. So a numerous time, the 5-minute is changing the frame. So basically, let me zoom out. So this is the overall chart here. This is the overall chart of 1 hour. Okay, so the yellow line you see, this is the overall trend of the 1-1 knot is never changing. Straight, just moving lower low, lower high, lower low, lower high, lower low, lower high, lower low, until this lower high is broken. We are never going to change that trend. We are still in downtrend only. But inside this, you see 5-minute is going down. It's coming up. It's again. You see it's slowly going all the way down. It breaks the last structure, lower high, and starts coming up again. It breaks the last higher low and starts going all the way down again, comes all the way up. So you see many times the trend is changing on the 5-minute chart, just to complete your 1 hour structure. So now in which direction we need to sell? So the overall trend is down. Trend the 1 hour. So this leg is a good to sell because in this leg, the 5-minute is trending down as well. But in this leg, the 1 eye is trending down, but the 5-minute trending up. This is risky. Now again, in this leg, yep, both are trending down, good to sell, and this leg, no one is down, but the 5 minutes up, not a good area to sell in this particular leg. Yes, a good one, because both are trending down, and this leg both are running down. So when your higher time frame and lower time frame trend matches, that's where you need to buy or sell. Okay, this is why finding your market structure is really very important. Okay, so make sure you do some practice on this one. Try to find higher lows and lower highs on the chart, and also look at the same area. Try to go in the lower time frame and try to see how the market moves in the lower time frame, inside the higher time frame moves. That will make you more clear. Okay, so that's all from this video. I will catch you in the next video. Now,